Hey everyone, it's PK here. It is about 8 a.m. here in Brisbane on a really wonderful winter's morning. I love winter in Brisbane, it's so good. Yesterday night I was at a meditation session, and one of my friends there, we ended up talking about property, and we ended up talking about how people can get into property with less than a 20% deposit. And look, she was saying, as do many others, that, I've heard that you can get into investment property with less than 20% deposit, but you have to pay something called lender's mortgage insurance. And, isn't that just unnecessary cost? Isn't it better that I wait another year or 2 years or 3 years until I can save up the 20% deposit and then get into property so I can avoid this cost of lender's mortgage insurance? She'd called up CBA, and they said that it's going to cost her $6,000 to get in with less than a 20% deposit by paying this lender's mortgage insurance. Okay, so I just want to talk about that because I feel that lender's mortgage insurance is like an not well understood cost. I think the Property Couch guys say that it's a cost that shouldn't be avoided at all costs. It's a cost that shouldn't be avoided at all costs. Okay, in other words, you may actually want to pay that cost because it's beneficial. So how's it beneficial? Mostly in 3 ways. A is that, yes, if you get into a property, if you pay less than 20% deposit, you will have to pay lender's mortgage insurance. But first of all, it's not that much money. So I think some people think it's tens of thousands of dollars. In most cases, for affordable property under $500,000, it's generally between $3,000 and $6,000. Okay, so A, it's not actually that much money in the scheme of things. B, it's still something, it's not free. So how do we understand it? B is if it allows us to get into property investment faster, then that's a good thing. Yes, we've had to fork out $3,000, $4,000, $5,000, but if we've been able to invest in property a year or 2 years or 3 years before we would have been able to otherwise, then just think about even if a property worth $300,000 was to grow at 1%, that itself has made that money back. 1% is a pretty ordinary growth rate, by the way. More likely, you're going to be buying a property $300,000 to $500,000 that's going to be growing. If you're actually following a decent system, not just following infrastructure trends and population growth and all the media. If you're actually doing your homework and doing the research properly, not just going on realestate.com, you should be getting around 4 to 6%. Okay, so that in of itself, in the first year, the growth of the property, and I've not even mentioned the positive cash flow, that's outstripping the cost of lender's mortgage insurance. So that's one thing, right? A, it's not that much money. B, that return on investment is more than 100% in the first year. C, it may allow you to get into a better asset. Okay, so let's say you can only afford $250,000 for your first investment property because you have 20% deposit for that. If you're able to avail lender's mortgage insurance and pay only a less than 20% deposit, then you might be able to get into an asset worth $350,000 or something around that. And that asset type, depending on the suburb, of course, may or is likely going to be a much better performer than the $250,000 asset. Okay, so that's the other thing, that by paying lender's mortgage insurance, you'll be able to get into a better asset, potentially, that'll give you the better income, that in turn will also give you the better growth. Okay, so that's C. I think we're up to C. D is that lender's mortgage insurance, even though, yes, it is a cost, it's actually deductible. Okay, so let's say it costs you $5,000, which is a little bit on the high side, but let's roll with that. Yes, it has cost you, but a good accountant will be able to deduct that entire $5,000 over 5 years. So let's say you're on the highest tax bracket, just to make numbers easy. Let's say 45, 48%. Okay, so $5,000 you've paid in lender's mortgage insurance. What they will do, the tax accountant will do, is he or she will split that 5,000 over 5 years, so 1,000 each year. And if you're in the highest tax bracket, let's say 48% tax, just make it 50 for round numbers, you get half of that back every year. So every year you're getting $500 of that back. If you're in the 30% tax bracket, then you're getting 300 of that back. So over 5 years, even 300 times 5, you're getting a lot of that $5,000 back anyway. So, think about it in that context. So I think that was D, or was that E? I forget. But those are the various reasons, why it's actually a good idea to avail lender's mortgage insurance. A, it's not that much money. B, you can get into the property market faster, and the growth and income from your property will far outstrip the cost of lender's mortgage insurance. C, you might be able to get into a better asset class, a little bit more expensive property by paying less than 20% deposit. Your affordability will be better. And D, you get all that back in tax anyway. So it's in a general sense, I can say it's a good idea. Of course, this isn't personal advice and there's always exceptions, but in a general sense, don't be afraid of putting less than 20% deposit and paying the lender's mortgage insurance. And by the way, E, are we up to E? I just thought of something. E is you actually don't have to pay it out of your pocket. It just gets capitalized onto your loan amount. So if your loan is $250,000 or let's say $300,000, the lender's mortgage insurance is $5,000, your loan just becomes $5,000 more. Okay, so it's not like you're having to dip into your pocket immediately and pay it. So if you're on an interest-only loan, which most investors are, the additional interest costs on a yearly basis is like in the hundreds of dollars. And all of a sudden, you're getting that back in tax anyway. You're getting into a better asset class. You're able to invest tomorrow as opposed to July 2022. Like, there's so many benefits, A, B, C, D, and E. I think I'm doing a pretty good job of selling it. There's always exceptions though, so you do need some solid advice around this, but hopefully that clears up a lot of thoughts as well. Hopefully that was valuable. Hopefully that was useful to you in the morning. I just took the rubbish out, so that's why I'm on my driveway. I'm going to go back inside and have dinner. Have breakfast, sorry. Have a great day, guys. My name's PK, and yeah, comment below if you have any comments or questions or anything like that, or feel free to DM me and we can chat. Catch you later. Bye.